All right, guys, super cool. We are live here on the Independent Investor channel. It's a Friday evening. I just want to thank everybody who's made their way in here to the group tonight. We do this every Friday at 9 o'clock for anybody who's tuning in after. You guys are always welcome to come in, pop in for a few minutes, or stick around for the entire live stream. We typically throw down for about 2 hours, and for a lot of folks, that might seem like a long time. I beg to differ. I don't think 2 hours is, quite frankly, enough. I spend a vast majority of my day focused on finance. It's a passion of mine, and I think it's wonderful to have everybody come together on a Friday evening for a few moments. Honestly, this is just a drop in time, to be honest with you guys. I would ask you to have some level of perspective. I know you're tuning into the channel to get my opinions on the stock market. I'll give you my first opinion this evening. It's still here. Okay. It's still here. And I'm betting on it being here tomorrow as well. So for all the naysayers that said that the stock market was going into the toilet, perhaps maybe it would be wise to take a step back sometimes and realize that perhaps the best answer an assessment that you can make on the market is I don't know. All right. I alluded to the prospect down around the 18,500 mark on the Dow Jones Industrials, that we were probably looking at somewhat of a potentially oversold market. And you need to understand the importance of not speaking in definitive language when you're speaking about things that you cannot forecast. All right. It's not like watching a Gen X dividend investor video where what he's talking about, figures that come right off the balance sheets, statistics from declared facts from specific companies. We know what their earnings are. We know what their earnings growth are. We know what their dividends are capable of doing based on historical premise. We can kind of put those facts together to kind of forecast where it is a particular company can go. I don't think you can deploy the same level of expertise on the market. I have sat here the last 2 weeks and I have been amazed at how quickly the analysts or the experts can flip a switch on this market. With that, I would encourage each and every one of you guys that are kind of making your way to the community for the first time. Maybe you've just are newly subscribed to the channel. We are flirting with 20,000 subscribers to the Independent Investor channel. For that, I highly thank you. I'm humbled at the opportunity. This is just the beginning. I look at this as an opportunity to build this channel the same way that I build my investment portfolio and the way that I look at building anything else in life, my physical strength, my spiritual well-being. I don't look at this any different. I really don't. And so the opportunity to build this channel with you kind folks is really kind of allowing me to come into my own. I enjoy this topic so much. And it would be a whole lot less enjoyable for me if I came in here and nobody decided to join me every Friday, but that is absolutely not the case. Multiple things have happened over the last couple months of providing this content through YouTube. One specifically was a breakthrough that I had last Friday when I had a 19-year-old come onto my channel, and for a long time, the demographic that I was really speaking to for the first couple years of the channel were the older investors, definitely mid-30s and above. But I want nothing more than to break into that younger crowd, and that has nothing to do with getting to the masses and becoming a YouTube superstar and driving around in a limousine. That's not really my focus. My focus is to try to provide the answer to any investor on really one of the things that you can bet on in the stock market, and that is time. Time is really the medicine that you can apply to any stock market, whether it be here, down, up, 23% off its lows, 37% off of its highs. We have bottomed. as of now. We are in a different trading range. Whether or not we're going to go back and retest the bottom, I don't know. You'll never hear that type of definitive language from me. I had to sit through some level of know-it-all talk for that time when the market was in free fall mode, seemingly. And it's amazing to me how those people tend to crawl under a rock after the market does something like it did this week. We just came off one of the best weeks that the stock market has ever had. And it can certainly be one of those gut punches for anybody who speaks definitively about the market, and perhaps maybe they're finding success in doing so in the market. I'm one of those folks that come on and you hear a individual testimonial from my success in the market, and my results are undisputable. So if I was unable to generate some level of success on a lot of different fronts in the stock market, there's no way in hell I could come on and do this channel. No way. No way. I'm in a little bit different camp than most at 42, honestly. The little bit of stock market awareness that I would give to somebody that's 21 years old would be slightly different than somebody like myself with the income and time horizon and risk tolerance that somebody like myself would have. Conversely, my stock market awareness advice for someone like a Gen X dividend investor who's in the group with us tonight, and Hidden Freedom Investing as well, who's popped in. Those folks that are working with a little bit different size of portfolio. I saw Matt Money as well pop in. The shout out goes to Matt as well for popping in. The advice to those folks would be individual in nature. So you guys will notice the strategies that I've deployed over the last couple weeks. I'm fairly satisfied with the results. Usually when a market happens, I had my good friend Christopher Blaine. I can't wait to put the syrup on the pancakes, my friend. That's an inside joke. He knows what I'm talking about. So I'm eagerly awaiting that shipment. But he said, hey, you going to scold me for not catching the bottom? Man, I tell you what, the stock market is a fickle place. It's interesting how a guy like myself, who's been in and out of big markets, big market swings, volatility, etc. I'll go through this and I'll learn just as much as anybody. Why? Because I'll take the time to self-assess, and I'll learn from what it is that I could have done better. There were things that I did very well. To get a little lucky, you've got to take some shots here and there. But with my age and tolerance and portfolio makeup right now, I'm a little bit more in the wealth building stage than I am the wealth preservation stage. The difference in the portfolio strategies that, let's say, a Gen X dividend investor deploys from day to day, and a strategy that I deploy from day to day. Now, I'm not saying holistically that I take on one strategy or the next, but I think in reference to each and every investor's strategy, you really just need to make sure that you can take on the strategy that makes sense for yourself. Had all good in the group talking about rendering profits off of a maturing CD and then taking and turning that little profit, skimming it off the top and putting it into the market. I like that type of talk. It's exactly why we get together and we draw from each other's strategy, because I think the unfortunate part about YouTube is that a lot of people will tune into the YouTube opportunity and think that someone has already found the answers enough to provide those answers through a conduit like YouTube, and then somebody can receive that message, go and deploy that and duplicate that success in the market. That's extremely shallow, especially when you're talking about individual holdings, okay? We can talk philosophical, we can talk about strategy, we can talk about all the different things to try and corral the stock market as wild as it can get, or to take advantage of it as tame as it can get, okay? But I really think you just need to be careful when seeking out this opportunity. I do take it very, very seriously, and I'm very encouraged by some of the younger folks who have made their way into the group, and they're sitting back and they're looking at this market and they're saying, is now my time? Should I get invested in this market? What happens if the market goes down? And I think one of the golden rules in investing, and I say this is somewhat cliche, but it helps explain a lot of the approach that I take to the market. And here it is. It's never as bad as you think it is, and it's never quite as good as you think it is either. So when we were at market highs, it seemed as if it was all okay. Everybody was in the clear. I made a post to Instagram which demonstrated this philosophy that most people have. Most people believe that right now is actually a bad time to invest, the vast majority. Whereas the same data call was made at the all-time highs in the market, and conversely, most people thought that that was the time to invest. We really want to challenge that to the very best of our ability and look to invest when most people are screaming and running for the hills. And in reference to Chris's comment to me about scolding him because he missed the bottom, there's not anybody in this group who caught the bottom. Okay, I'll just let you know that right now. Okay, but I think what it does is, having gone through this radical downshift in the market for something that was really impossible to foresee. I knew about this before the downturn in the market, and I didn't do anything about it. And in retrospect, there's no way in hell I would have done anything based on the data that I had at the time to sell everything. I'm not really sure. There's a few YouTubers out there. I know one in particular who used to be a very big channel and still is a fairly big channel, said that he sold at the top. I don't know if I believe that unless I saw it on paper. And again, to what benefit? The data that I was looking at would have led me to believe that this would have been just like any other geopolitical risk in the market, and to drive it down the way that it did, over 12,000 points, as violently as it did, was a real shock to everybody. Okay. I think the further question really needs to be, what did you do about it? If you did nothing, fine, no problem, right? This is just the stock market. It's not a measure of how good you are as an individual. Okay. It's not. It has nothing to do with that. All right. I'd like you to work to keep your investing strategy in its investing strategy lane, and don't let this bleed over into other aspects of your life. And I'd like you to keep it as small as possible. All right. It's not worth getting cranky about. Something that can really, really help with your investment decisions in the short term is to understand the positions that you're taking now need to be made with a long-term horizon. And it makes it kind of tricky when you're engaging in some of the minute-to-minute activity that I engage in with, let's say, some of the cruise lines or some of the airlines, or some of the trading positions that I've taken over the last couple weeks, because profits can be made really, really quick and losses can be racked up really, really quick. I came out of winter. In retrospect, you look back over something like this and you really can't see the carnage until the smoke clears a little bit. But we're up 15,000 for the good guys. Okay. Could I have done better? Sure. I'm a very critical investor. All right. With the amount of pay dirt that I had set aside, perhaps maybe some of the more aggressive strategies that are represented in the group here tonight maybe could have rendered some better results than that. That's okay. I don't scoff at a $15,000 trading profit, especially when those were injects to a pretty radical market, put capital to risk only to withdraw that risk and take that risk off the table immediately, right? So that just gives you a small insight. I'll go ahead and do a video as well. Quite frankly, I'm not really that proud of that. There was a touch of luck and a touch of reward for my paying attention to the market and being aware. That's about it. Can you scale that type of activity? Sure, you can scale your ability to be aware of the market and keep an eye on it. And if you've got the fortitude like me to put some capital to risk down 39% after being down close to 60K in the investments, sure, yeah, it's duplicatable. However, based on the consensus that I got through the community pulse, all right, during that time, there was very, very few people that were hitting me up and they were saying, Ryan, now's the time to buy. Actually, it was the opposite of that. Most people were hitting me up telling me that the stock market was going to hell and it was all going away. And that most people were calling around 10, 15,000 on the Dow Jones Industrial Average. That was a sentiment that I thought was probably more risky than maybe calling a bottom. I'm just not really sure what good comes out of that type of lingo. Certainly, it can be part of the discussion as a potential in this hypothesis. Who was going to know when and if we were ever going to get good news on this particular problem that we have going on right now? So all worthwhile discussions, certainly. And again, we're all the wiser looking back over it, but don't beat yourself up. Learn from it, okay? Don't try to make up for things up right now, 23% off of this base. Don't do that. We absolutely want to take a long-term perspective. I'm going to bring on Kyle from Passive Income Investor. I think it's going to be great to hear his perspective as well. This evening, he's taken the liberty of offering his time up to come and help support me on the live stream. So I'm going to pop him in here in a couple minutes. It's always nice to hear his perspective, get what he's thinking in the market. Matter of fact, I'm going to pop him on right now. I've been going for about 17 minutes. I had a lot that I wanted to talk about because I think we're in some dangerous territory right now. And I don't mean to scare anybody off. Like I said, the stock market's not going anywhere. It's not dead. Okay. None of us lost everything. I mean, you would have had to try really, really hard to lose everything, but I'm fairly certain that nobody lost everything. I'm down about 10% overall. And I'm actually up in quite a few holdings right now with this bounce back. Why? Because I held true. And that is one of those golden rules that I want everybody to either write down, carve into some stone, if that's what you need to do. But when that volatility is going on, man, there was actually some talk on the television from some people who are pretty smart people talking about the potential for liquidating and consolidating the portfolio at that particular time. No way. I think the wrong people hear that and they misconstrue that as advice to sell out. And that is absolutely not what you want to do when the market's doing what it's proven to us that it's capable of doing over the last couple weeks. So with that, guys, I'm going to bring Kyle on. We'll run the live stream. I'm going to focus on and let Kyle kind of take charge here and give his piece and address to the community. I always enjoy what he's got to say, and that way I can get to the thread here and address some of these questions. And thank you again for making your way on here. I'm going to pop Kyle on here from Passive Income Investor. Awesome. You got me, Kyle?
Happy Friday, folks. It's good to see you again. Corn streaming with nowhere to go and nothing to do, getting lonely. I even did a self-quarantine haircut. I couldn't find a better way of doing it. So it took 3 tries though. I found tons of blotches I missed. But yeah, man, this is getting wild at this point. I'm not too confident in how long the market's going to rally here when we got earnings coming up so shortly. But all the investments I'm trying to do for people just hold back for now. But yeah, it's getting tough, man. Getting real tough. I just paid up my taxes. I didn't want to take advantage of the extended period, but after paying the taxes, man, it just drained my entire account. So now I'm just getting into some pretty interesting discussions overall, just about the benefits, which is something I wanted to ask you about. What are the qualifications in the U.S. for getting the tax benefits or the emergency relief benefits?
That's a good question, man. I've really been kind of off that pulse. And to be honest, I'm the wrong guy to ask. You're talking to a guy who feels a little bit guilty for getting my stimulus check, that of which I didn't have to do anything other than file my 2019 taxes, right? So that'll be an automatic pump. I disagree with it, Kyle. So, I'll be a rare voice that will say that we'll end up having to pay for this advance on the 2021 tax refund. That's all it is. Okay. Everybody's like, whoopee, it's free money, yip-de-doo. And the majority of people will go out and blow it. And that's what they're betting on. But
yeah, for sure.
Again, that's going to be a checkbox that you're going to have to answer on next year's taxes. And my tax refund I'm not going to get a tax refund. I've got so much short-term capital gains racked up already this year. I mean, I'm just looking at it as a side job right now with the amount of day trading I'm doing, swing trading, not day trade, swing trading quality,
Yeah.
you know how I roll. But with regard to the $10,000 small business loan, I started the application and then I put it away. I just felt bad. I really did. I'm like, this is not for me. I can't do that. So
yeah, I was getting in a pretty heated debate with somebody on my YouTube channel because I signed up to get the relief package here,
Good.
but the stipulations in the gray area is really rough. And the only reason I claim for it, like if I got any kind of checks at this point or my income started to grow back above that 2,000 mark a month, like I would avoid it. Like I wouldn't see it being necessary, but it's just been this really rough debate because, people look at me in my situation, having savings, getting some of these little passive income sources built up. And the government kind of hinted on they didn't really want you taking money if you're self-employed, if you have some other income. But my primary income source is going to be dead zero probably until about June at this point. So, I mean, my slow periods is between January and February, and I really was relying on that March income to essentially finalize paying my taxes. But I had to pay my taxes out of my emergency fund. So it kind of just drained everything. So I signed up to get it, but I've been playing this moral debate on there's probably people that need it a lot more than I do, obviously. But trying to find that right, soft spot where, you don't feel so morally upset about it. Cause I kind of feel the same way you do. Like if I had any kind of income over, 1,000 or 1,500 here, I wouldn't even bother. But that's been the interesting topic I've been having today with a bunch of people. Cause I am publicizing.
You'll hear no judgments from me as far as the only one I would judge as far as making a decision, whether or not I felt good taking it or not, would be on me. As far as you go, I kind of know your situation, man. Your income is based on you getting out there and working, and this is hammering you. I don't know. If you value my opinion at all, I would say that there's going to be a lot of people out there that quote take advantage of this. And I think that's part of my angst a little bit. Like I'm being paid, Kyle. I'm a salary worker. I get paid whether or not I'm working from home, checking my emails, doing this, that, or
lucky.
I'm lucky, right? So, and that's the thing is there's people out there, man, that are suffering. And my heart goes out to those people. That's not a cool feeling, man. I've been there. Don't get me wrong. I have freaking been there. I have put my card into the ATM and it said, no, thanks. Get the hell out of here, loser. I mean, it said that on the screen, I've been there in my life. I've been there. I've been in hock with the IRS and I've been unemployed and I've drawn unemployment to help me. I've been there, and I know how it feels. It's tough, man.
For me. I don't know. I kind of have this disconnection with my portfolio because I don't look at it. It's something that I really want to bleed off of whatsoever. But at the same time, it is that extra income source, right? That I could tap into and not necessarily take advantage of the government. But I also look at what my cash flow's been and what it's taken me to get to this point. And it's playing that moral debate of, I have a lot of money now, but you know how much I've given up in luxuries and just general life to get to this point. And the question is do you draw off the government or should you not do that and start taking advantage of the portfolio at that point? Mind you, I'm not in dire need here, but I'm definitely treading real light from here on in. And then it comes back to the debate too on whether I would invest some of that money I get from the government. And that's another morally sound discussion. I'll probably end up using the majority of it is continue building my emergency fund at this point. I'm in no bad spot. I'm glad that I could set up the drip system too, and keep doing share buybacks through this because but I'm still treading extremely lightly with everything I'm doing, and everyone keeps telling me I need to stop talking about this stuff because I like being as open as possible with my circumstances, but it is getting to the point where there's gonna be a lot of moral discussions and a lot of things that come in and out of this with people losing money, people making a lot of money. It's gonna be I guess it's gonna be rough, man.
I totally agree with that. I want your opinion. I wouldn't ask for it if I didn't want you to give your true feeling about what was going on. It looks like the portfolio is kind of back in good shape and on good footing. Rule of 72, man, puts you up close to a millionaire at 14 years. So,
it's been I don't know how your portfolio movements have been, man, but every time I clock into it, it's so mind-boggling to me, considering it's doing like 10 to 20K mood swings on a bi-daily basis. And it's really weird to be comfortable with that at this point, but that's like my typical yearly income fluctuating on almost, bi-weekly basis at this point. So it's fascinating to watch, but it's crazy how fast it came back. It's like I woke up last week and I must have been somewhere around like $110. And then, you get up today and you're back at $130 and you're like, what has happened here? And like, why is it happening? I think the S&P right now is only down like 14% year to date. How does that make any sense with like?
I think it's less than that actually. Year to date, I think it's actually less than that, man. That's pretty wild. You might be right.
It's uneasy, man, because like you watch those people that were selling me some shares a couple weeks ago that are probably just beating themselves up for selling it, and now there's going to be people buying this top with a really good potential of another. I don't know. Like you said, it's impossible to make predictions on it, but we just don't have any balance sheets, and there's no way that they're all going to be anywhere near half as good. And same with the second quarter, right? I mean, we're in the bad spot for this between two quarters, so it's easily at least 2 to 3 quarters of. Well, and this year's going to be a write-off, right? So I mean,
it will be, and write-off is a good term because when these companies start to report earnings, I think a lot is baked into the overall stock market. And with the stimulus that's being pumped into the market, there's a lot of talk right now of a lot of companies getting a pass and not even giving forward guidance. So that's a couple things right there that because they're not held to that normal of scrutiny, right? For example, Apple comes out and it reports a penny off of its estimate. Stock goes down 20%, right? I don't know if stocks might be given a little bit of latitude through this. We'll see. We'll see what happens. And that's kind of one of the reasons why I'm not holding cruise or airlines into earnings, because I think those are going to be brutal. And I don't really think, that's a
brutal
tough
is an
one.
understatement. I've been watching a lot of good videos on that stuff.
It's easy to find a silver lining with JNJ, right? JNJ's back positive again.
Yeah, JNJ is easy.
If you're looking to get long Delta Airlines right here, I wish you all the luck. I missed it. I made $5,000 on that trade. That's it. $5,000.
You caught them at a good time.
It was okay. I should have been more aggressive. I probably could have made more, but it's the woulda, coulda, shoulda, right? But
same boat, man. I was going to use my line of credit to buy some stocks when they hit bottoms I could never imagine, and the market just went too fast up. I think it was real.
And you're young enough to take those risks. You're young enough to where you could probably do that. But you got a lot going on right now. It's cutting deep when you're doing stuff like that.
Yeah, man. I really want to take the risk because I always feel like at my age to use debt at this point to a leveling degree. Like I wouldn't leverage more than 5% either way. But I always get this gut wrenching feeling because, like I said, I'm a hard time guy owing anybody anything. And when I listen to people that are like, if you're going to use debt, leave it for the years that it's going to take to actualize. Don't just throw it in and pull it out or anything, right? Like use it for a good long-term investment. But the problem with that is I don't like that gut wrenching feeling of, because again, right now, like I don't owe anybody anything. I don't have any debts, paid the government off. So, I mean, I'm scot-free. Like my primary moral in the back of my head is always to protect that money as much as possible before.
So what was your problem? What was my problem? What was my problem at 18.5? Why didn't I just pull the trigger on the S&P 500 right there at 18.5?
I was sitting there, man, and I was itching off my finger looking at it just go up and up and up. And I'm like, you know what?
Oh, no, come on. I had 100 shares of Boeing in the queue to rebuy after selling it twice at 120. So I left another $5,000 on the table there. So to each his own. Again, it's the woulda, coulda, shoulda. And when you pay attention as much as me to the market, there's a lot of opportunities that I see come and go. And I pass on a lot before I pull the trigger. And even some of the ones you pull the trigger on don't work out,
Yeah, I need to expand my knowledge base and start maybe learning the options a little bit deeper. I got to pick Matt's brain a little bit better. He understands that a little more. But I wouldn't mind trying to expand in that aspect of it. Because like I said, I don't want to take on the huge risk, but if you could throw 400 or 500 at a put option in something, or just whatever, right? Something that you understand well enough. Because when I was trading like the MJ sector years back, and I sold out, like when Canopy started hitting $50 a share, I'm like, anybody that shorts this from here on, and like some little things like that, where if you throw 500 at it and you lose it, it's not the end of the world. But if you just get that right call, then you're banging like $10,000 off hardly anything, right? I wouldn't mind trying to learn that aspect of it a little bit more. But either way, like I'm feel fortunate to be where I am. So I'm always on that cautious side of things, just trying to protect the boat and not puncture little holes in it, because it's those little things that have got me to where I am. Like I said, I don't make huge money, right? So I still look at the dollars and cents so analytically that it like kills me inside. Like the amount of frugality in my life at this point is getting to the extreme. So even when I look at big numbers, I'm still looking at those little inches, and that $500 that I put at risk, I'm like, I could just throw it at this for the next 30 years and not worry about it and be just as fine. But I don't know, like you said, to each his own, right? I mean, I've been watching a lot of people pull off some pretty interesting trades, but I really want to hear from the people that have been selling these bottoms. I always want to hear more from the people that make the mistakes and see what they're learning from it and how big they are. Because again, like for the market to hit those lows,
you won't hear. This is not my first rodeo, man. It's not my first rodeo. And I tend to take social media lingo with a grain of salt, because, half of what somebody says that's untrustworthy up front anyway is probably 3/4 of a fabrication of what actually happened in reality, and
what
that's
did
not
you?
to say-
I think we touched base on this last week. I think I don't need to bring it up again. I was going to talk about Warren Buffett
Sure.
with the Delta selling out of the airlines, because
Yeah.
I mean that has been such an interesting. I've been watching like so many big financial channels out there trying to break down the decision making behind why he sold Delta, because he owns more than 10%, I think, of Bank of America. And just and that's the big excuse. I watched professional analysts say, "Oh, he just sold because he had more than 10%," and they forced him to do it. And but the reasoning behind it doesn't make any sense on that aspect of it. I think we touched base on this last week. We don't have to go too deep into it, but it's going to be so exciting to see Warren Buffett, selling something he just bought and then having to explain himself. I honestly think it's going to be the biggest. It's either going to turn out well because he's good at discussing these things, or it's going to be a PR disaster for the Oracle.
If you want to know my small opinion from a little fella in Virginia who runs a little YouTube channel just shy of 20,000 subscribers, I think selling Delta was a big mistake.
I think they're going to do fine.
When you have position power like that, and why not just step in and buy more?
That's what you would think, but like you said, because he still has a huge percentage of the shares, but to a lot off, that 300 million, that's got to be in comparison to the portfolio size, it's barely a dent. But in the perspective of investing, it seems like a major mistake. Like somebody had to have done something, because there had to have been a meeting. I'm just picturing this meeting with all these guys sitting around a table and having to make that decision.
If they had the figures done up to where some tax loss was more prudent for them, and Delta just so happened to be the candidate, that may be it. I mean, we're sitting here talking on a YouTube channel about these folks who have rogues of accountants and rogues of attorneys who work for them and are scrutinizing the numbers. They know what the numbers are before they even have to declare them. So, and I don't even know what Warren Buffett's entry price on it would be. Because typically when they declare these buys and sells, he usually ends up with some incredible buy price and then ends up liquidating the position at some crazy liquidation price. Like it's not even available to normal people on the market, while rendering himself a 10% dividend the entire time he owns the name. So he's very, and that's really the value in Berkshire in the first place, is that you invest through Berkshire to get some level of access to these exclusive deals, but
no, for sure. But yeah, man, what do you I gotta ask you too, because I haven't caught up if you've been posting too many portfolio updates, but what'd you do with the profits? Did you end up throwing it back in the market, or are you sitting on some cash right now?
To an extent. I've got about 55,000 still in cash, and I'll probably the video I just posted today, that was a partial video for a friend of mine, which I don't think he understands what I did for him, which is going to be funny when he finds out, because he came in and commented it was Jamie with Focus Fire Investing. So I put out a video today and I mentioned, hey, go on there and help Jamie and subscribe. And he didn't say anything when he came in. So I don't know if he did that, because I didn't tell him. That's not my style. I wouldn't have told him. I wouldn't even have asked him for permission either. But I did. But
hopefully he's coming back. I saw that on JMax's channel there, and I had to go and stop. I feel bad for the guy.
But here's the thing. I rendered the trading profit, which the 15,000 gives me a good buffer to put some money to work. 46,500 got invested over the last couple weeks into 14 positions, long dividend players. Now I put a small amount in the top 4 growth stocks. Salesforce, I think right now is a screaming buy at this entry. It's incredible. It is incredible. That company makes money hand over fist, and that is an industry you're going to want exposure to going forward. All right. Then you got Google,
Salesforce?
Facebook, and Amazon. Yep. Those are the 4 right there. Smaller positions. Okay. But they will supplement my idea of taking my M1 portfolio, my aggressive growth portfolio, and taking that and putting it into my taxable brokerage. The remaining 10 positions were companies like, Realty Income, picked that up, AT&T. I picked up an additional block of 50 shares of the Raytheon United Technologies merger. So I picked up 50 there. Honeywell is the number 1 industrial pick as far as I'm concerned right now. I think Emerson is probably number 2, but I've just got so much industrial right now. I had to kind of not buy some of the other stuff I was looking at. There was some rail stuff that really looked good. John Deere, I can't believe I passed up on the opportunity to jump into John Deere at 110, 115. Holy moly. What a crazy great entry, and just tons of value that you had to just kind of ole. But certainly some other stuff that I'm thinking of. What else did I buy? CVS I bought. I bought Starbucks. That's a no-brainer. Starbucks was like shooting fish in a barrel. That was a stupid easy. That just got crushed. And when China opens back up in the mid 50s, that was an easy play.
Yeah.
And some other stuff as well, but that's all in the taxable account. My Roths have been kind of shut down this whole time. I let them go down to 70 and now they're back up to 90 each. So I was down 60,000 between the 2 accounts, and now they're back up. Geez, I'm off less than 20 grand. I'm satisfied, man. Geez, those are going to work.
Same boat, roughly, give or take. But
Sure.
I'm still buying more stocks for other people than I am myself at this point. A lot of people came to me on that market crash. It worked out pretty well for them so far. But like I said, I'm hoping it comes down because I got everyone stacking cash. But we're still buying. Like I'm really cautious on the stocks that I'm buying, especially when I'm buying other people's stocks. But I don't know. I'm not really stretching out of any other regular bounds. I'm kind of primarily sticking to Canadian stocks because I'm not a fan of Canadian stocks to the fullest extent. But the levels they've been hitting is just like the U.S. Like you can't pass up on some of these deals. But I gotta buy.
Kyle.
Yeah, Wells Fargo for sure. It's coming back a lot. All the banks, actually, all of them have come back. What am I saying?
Holy moly.
You could have threw a dart at any of those. And you'd have been
Goldman Sachs, Morgan Stanley, Bank of America, Wells Fargo, Citigroup, and I'm missing one. I'm missing another one that I own.
On the U.S. side,
yeah,
you get JP in there.
JP Morgan, right? Yeah. That's the dartboard right there. And
yeah.
I even got greedy. I took a spot in BlackRock as well and sold it for just a quick trading profit anyway. I've been keeping pretty tight collars on my trades, but when I make a little bit, I'm out.
I'm sitting in a tough spot on one of my positions there just with Facebook because when I just finished filing my taxes, I made a huge mistake. It's been a big topic. I keep touching on probably a little too much on my YouTube channel. But
I didn't catch that video. I saw the title.
Yeah, it was my RRSP, man. I over contributed because I thought you accumulate the allotted amount like you do with a TFSA, right? Like you add up all the past years. You don't do that with an RRSP here in Canada. So I made a bit of a huge mistake and I ended up over contributing by 5,500. The good news is I'll get most of it back. The bad news is I'm not going to be getting it back until the next tax filing season. So I ended up losing out on something like 500 to 800. I just pulled it out today actually, but I had to sell Facebook. And I'm just figuring like I had to sell it. I think I sold it at 172-ish. And I'm praying to God it comes down because I've been waiting 3 days for the sale to finalize. So I'm just trying to get it out.
It's not going to happen unless the market.
I'm buying it back on Tuesday.
Yeah. Well, you're fine. This entry right here at 17 in the 170s is fine. I don't think it's going to 140. I don't want to risk it. It went down to 150, 140 something at the deepest part of I'd have to look at the chart on where it actually hit, but you would have needed a limit order to catch that anyway. But 150 would have been a great entry on Facebook.
I got my girlfriend in Facebook, I think at 153, somewhere between 150 and 160. I got her a great price in there too, but it's so dire sitting here in these volatile times, knowing I can't leave that money in the account or I'm going to get screwed. And you're just like, oh man, this is going to be rough. Like I got 3 days to get this in and out and then back into the position without it trying to hopefully rally too much. Because yeah, either way, like I'm not going to complain. I did really well in my RSP. And I'm still up something like 7,000 or 8,000 even after paying those taxes just because of Tesla. So I'm not trying to beat myself up too hard on it, but man, it sucks making those mistakes. And I'm hoping being honest about it is going to show people like, be careful what you're doing with these registered accounts, because I think they're unbelievably useful, but don't make something so foolish. Talk to an accountant, right? Yeah. My account was great with it though. She really helped me through that process because she even told me sometimes you don't even have to say anything, and sometimes the government won't notice. But if you get caught, you accumulate monthly interest and stuff. So I'm like, you know what? Yeah, I'll just pay the tax up front. We'll deal with it next year and use it as a write-off, or try and file it back as a mistake. I know people that over-contributed a lot more than that and had no issue getting it back, but not the funnest time in the world to be doing this. I kind of just want to not have to deal with selling and trading right now, especially on stocks that I'm dying to hold, especially at the prices they're sitting at. But that was interesting. Either way, I wish I had a little bit more money. I'm still out there scrounging. So I'm hoping to get some government checks coming in here. Hopefully our Shopify store, we get the YouTube keeps rolling. And even though we're seeing AdSense drop pretty dramatically here, I think my AdSense or my CPM is down something like almost 40 or 50% at this point. So, I mean, I'm still scraping my nails against the wall to try and bring in income, but I'm still going to try and throw some money here and there, even if it's 50 or $100, right? Like I'm not going to be too picky about it at this point. Yeah. Got to keep hustling, man. Keep cost averaging.
For real.
Do what you can.
For real. Yeah. Are you satisfied with how the portfolio performed through this downturn, Kyle?
Yeah, I'm not gonna. I don't want to gloat too much until I see the earnings, because companies that I'm holding to prove to me that they're these recession kind of proof stocks that I've spent the last 5 or 6 years trying to build into. This is really going to tell, because I went over all of my positions, as I'm sure many people did, out of the paranoia and just checking in on them. And when I look at like the losses in my REITs that I hold and like how many tenants are asking for deferrals, it's extremely small. Most of them are most of the big REITs are under 5% still on people asking for deferrals, which is incredible. The banks aren't cutting dividends. My utilities have been unbelievable through all of this. And then I just really got to see if MO and BTI will hold up and prove to me that, addictions will overtake, anxiety. Unfortunately, but it is the reality. And then finally, the tech stocks, right? Like it's going to be really neat to see how Facebook plays along with Apple, considering we know this is probably going to be the worst earnings Apple's reported in God knows how long. And it's going to be fascinating to see how that triggers the stock. But I mean, like I said, for how much anticipation there's for bad, for how high the market's up, I just, like you said, I'm not sure. You're a little bit more bullish than I am, I think. I'm a little bit more hesitant on it at this point because I just don't know how this gets priced in. It's so hard to gauge this going forward. So I don't know how people are getting so gung-ho. Again, on individual positions, there's still deals out there, but on the overall, taking the broader view, it seems more challenging.
I think you can be bullish to the future. I think being bullish short term, I would think short term right now, I'd be extremely cautious. Especially based, or again, it always comes back to, look, if you've got less than 10 years to retirement, would I be dumping $500,000 at this market right here? Yeah, maybe not. Maybe not. I'd be careful, scale into it as if we're investing at a market high, right? We're at a new market right now. So don't treat it like we're so far off of the record highs that we saw in February. Treat it like we're at all-time highs and just eliminate that top. Right? You start to look at the market a little bit different with a little bit better lens and with a little bit more clarity. I would invest here cautiously. It's run up extreme. This was the best week since the 1930s. This week, it was insane. This week was insane.
They love the headlines, man. Gotta love the headlines. The volatility is maddening, but it's always historical times in the stock market, isn't it? It's always something here. I still think if we can see a clear sign at the end of this, but man, I don't know, the politicians and stuff right now, they're really pulling back on highlighting much of a future at this point. Short-term / long-term, maybe the next 6 to 12 months. I mean, there was some fairly bullish statements coming out of these, a lot of the doctors and the virus experts with Trump or whatever. But Trudeau in his last talk was very hesitant on trying to give anybody like real, motivation towards seeing an end. Because he says even after this is over, we're not seeing a vaccine for the next 12 months, and there's a very good potential. There's still going to be spurts and moments where this thing is going to pick up in certain communities. Like it's going to be pretty hard to abolish. But I don't know anything. I can't talk on viruses. I don't understand it at all. So I'm curious to know what the second wind could be like. Because again, who doesn't say that, in the next month, because everyone's been huddling down, it completely drops off. And then one guy goes outside to a party that accidentally has it.
Okay, Kyle. So if you had $5,000 of my money and you had a 5-year time horizon, would you invest in Carnival Cruise Line right here?
No, not with your money. Maybe with my money, not with your money.
Fair enough.
It's weird how I invest, because I always seem to make other people. It's really dumb how that works. I always end up making other people better short-term gains than I ever do myself.
I give you I give you 100% guarantee, 100% in 5 years, Carnival Cruise Line will be back above $50 a share.
You're gonna 100%.
Actually,
I don't want to bet against that.
You don't want to bet me because I'm right. Yeah, you don't want to take those odds; they're really bad. So cream dividend.
If it was your money, I'd investing. I'd rather take the slow dollar at the 10 or 15% discount than take the gamble, the risk on the 80% discount with no dividend.
No, in all fairness, that's kind of where I'm at. I feel like, so when you said, look, I'm more bullish now. Yeah, but I just named the companies that I'm entering into, right? High quality, good dividend payers. This is the first time I've invested in Realty. Maybe I've invested in Realty Income once before in the Roths a while ago, but I don't remember. But this is a good big position I'm starting to establish here. And I'm going after the yield. I'm not going after a company that, look, if I was an avid cruiser, maybe I would look at this a little different. Am I going to be as stoked to go on cruises when I know that this is going on? The question is how long? How long?
I can guarantee you airlines come back long before the cruise lines do. If I was going to make a bet, I'd take the airlines over the cruise lines. But at the same time, it's that big debate of, do you want to take, depending on your exposure, but I always have that debate of, do I want to take on the extra risk for hopefully at some point, making a 5 or 10x return, or would I rather take the really safe stock that's finally on a discount and it hasn't seen it for eons, maybe a bank paying a 6 or 7% yield? Because I mean, that's a life. Like they're both probably good long-term lifetime holders, but it's just when you're trying to get those, like you said, world-renowned, super solid, safe companies, like I don't think you're going to see the discounts you're seeing today. And again, I don't know. It's always that rough debate. I guess it comes down to your exposure levels.
And I just want to make sure. And the point of the few releases that I've made over the last couple of weeks have been, look, it's okay to take a strategic shot, but make sure that Carnival Cruise Line isn't your only holding in your portfolio. Okay, make sure that you've got a good basket of the good quality dividend paying stocks, and maybe even a good exposure rate to some ETFs, index funds, if that's your thing. But man, don't tune into the channel and say, hey, should I buy Carnival Cruise Line here? And you don't know squat about the market. You stand to lose a bunch, because what's going to happen, man? You're going to buy 10 shares of it, and you're going to be up 25%, and you make a few bucks. That's it.
Yeah, exactly.
I mean, those trading profits I was making, I was putting larger positions on, 100 share positions that would render me quick profit if they won, and lost me if they didn't. But
yeah, I noticed some people in the chat group mentioning the MJ sector. I'm really on edge to see how the MJ sector is going to perform through this. I've been keeping an eyeball on some of them because obviously I have some exposure to Cron through MO, so I'm always keeping my eyeballs on it. But that's been a big debate in Ontario. It's been really fascinating because there's been a lot of arguing because they keep the LCBOs open, but they force shut down the dispensaries. You can still order online. But they're seeing a massive increase in sales since people got locked down, which is also a good sign for the companies I'm holding. But I still wouldn't want any direct exposure to them. But man, it's going to be interesting to see how some of this turns around. I've noticed they've been fighting a little. They've been really getting it together. In the beginning, I was complaining so much about just what a disaster the entire the whole MJ markets were here in Canada. But the government's been really working hard. Bringing it together at this point. So, I mean, it's going to be fun. I wouldn't jump in yet, but maybe we'll start seeing a turnaround sign. But it looks like we got Lydia.
Hi, how are you?
Super
Not too
good.
bad. You know what I think I'm going to do? I would love to hear you speak. So I think I'm going to hop off because I've been on here for a little while, and I'll let you take the stage, and I'll touch base with Independent here in a little bit. But stay cool, guys, and I'll
Thanks,
catch
Kyle.
you soon.
Same
All right?
to you, buddy. Same to
Always
you.
a pleasure.
Yeah, man.
Hey,
Talk to me.
Ryan.
What's going on? What's going on?
Oh,
We got
you
the
know.
East and West Coast connection here tonight. What a treat for the audience. Rock on.
Oh, thank you. I'm happy to be here. Always watching you, even when you motivate me to get off work early.
Nice. It's been pretty crazy times. It's been interesting, no doubt about it. You know me, I always say the market has a weird potential to dole out something that's you couldn't have really foresaw this happening. At least good on me for coming and admitting how I've perceived this. It would be awful arrogant for somebody to come on and say, oh yeah, I saw this coming. No, you didn't. Nah, this has been pretty wild. And I guess I definitely feel for the newer investors. I've had a few folks that have come on and they were like, yeah, it was great I started in January, February, and it was going up great. And then it's like, whoa, you go through the record drop, but what have you been up to? What you been up to?
I actually did some changes. So, you know how I paid off my truck. So I was like, okay, I'm debt free. I'm very impulsive sometimes. So I ended up seeing how I can buy a house. So I started looking beginning February, and I ended up buying a home that I can have rental income by the end of the month.
That's a tough market you're in. It's tough. Good on you. It's pretty courageous, to be honest with you. I don't know if I could have the stomach for that, because you're in it. I know your market. It's an interesting one. I mean, I'm from Oregon originally, and I can tell you, I can own a mountain for what you can own a home for.
I got a decent deal. I mean, I have now my daughter gets her own bedroom, so I really like that. And then it came with the back house. It has a little studio there.
Oh,
and
nice.
Then the laws changed a lot in California, so you can it's easier to convert a garage into an additional unit. So I might do that later in the future. So it was a huge learning experience.
Do you have to go through any zoning, or how on that? Do you have to go through any zoning or permitting or what's the deal?
Yeah. So I moved from San Pedro to Long Beach. So now I'm in Long Beach.
Oh, long way. Long way.
No, I am. Yeah. But I lived in San Pedro all my life. So it was a big change for me, I felt like. But yeah, the zoning laws, I think beginning of January of this year in LA and I think in a lot of places in California, it's a lot easier. But yeah, you do have to go get a permit, you show them your plans, and then they'll approve them. And then they charge a percentage of how much it costs to build. The good thing for the back unit I have, it already has like a kitchen and a bathroom. So all the plumbing and all the hard stuff's already done. So it'll actually be pretty cheap, not as expensive to build like a 1-bedroom back there. And rents here are ridiculous.
I know.
So I was able to rent a little studio for $850, and I found a really good tenant. So
oh my gosh, man.
And it was that's a whole other thing too, like finding a tenant. I got over like 100 applications. It was insane. And you just have to have really good quality photos. I used the ones for like when they were selling the house. They let me keep those. So brought a whole bunch of people, and then I priced it pretty nicely so I can, get a nice tenant. And then I picked one, and then the mom co-signed. So I'm really happy. She's really good. And it's funny because I got this huge mortgage before this whole thing started happening. So it was a little scary because, you got this huge responsibility now. Before my rent was only $900, and now my mortgage is like almost 2.5 times that. So it was pretty stressful, but I've been very lucky.
And you got a good job too. You got a good job. That's the key. That's where I feel for a lot of people going through this, man. If I lost that, it'd be like cutting off my leg,
Yeah. My brother got laid off from his job while this whole thing was happening. And then my other brother got his hours cut. And then I was lucky enough to be able to work from home. I work at a law firm, so it's an essential business. So we have to still keep things moving. But it's definitely very, very stressful. But I just got back. I had to since I had to sell my stock so I can have a good down payment.
I saw that. Yeah, I saw that. And I did one of these. I was like,
yeah, I think I had like a full on anxiety attack at night and wanted to cry. That I did that again. I was like, oh, why do I keep doing this? But you know what? The stock market is a tool to help you. And it helped me get out of debt really fast with my truck payments and stuff.
Yeah.
And then it allowed me to get a house. And I'm 28 years old and now I get rental income and stuff. So I think I'm very sad because on one of my portfolios, I think I had over a 30% return, and another one, it was in the 40s. They weren't very big. And then my TD Ameritrade, had 7% in like 2 months. So
yeah, but that was a couple months ago. So you timed this thing well.
Yeah, I don't know how that happens.
Yeah, just say it, because if I'm doing the math here correctly, it would have been like I've declared some of the figures to you. Down 60K, 30K in each of the accounts, well over 100 in both of them. To see them go down to 70 in each of them, it's like, oh, that's nice. Very
I don't
humbling.
know if I have luck or what, but both times I have cashed out, it's been at the peak, and right after I cashed out, it's gone down a lot.
Well, I tell you what, something that I don't talk about very often on the channel, if you pay particular attention, one of the niches that I like to talk about is for sale by owner. So I have owned 2 houses actually in my life, and I did well with one and did very, very well with the other. So real estate, ironically, has been the greatest investment that I have ever made. In addition to any stock trade or investment that I've ever made. I've made a lot with the stock market, but I can tell you that real estate, yeah, that's where it's at. It's just, I'm not kidding. I would tell you the same thing I would tell myself, is that real estate, it's carrying a lot of overhead. I like the idea of having that tenant out there. That's a big buffer. Wow. It's really, really big. And in hindsight, if you were ever to leverage a little bit of that profit and put it to work in real estate at that time, I would just look at it like, hey, good on me. I mean, nobody saw this. That's the thing. If you were involved in the stock market into this, you were in it like me. And I'm disciplined enough to hold it all the way down. And that's exactly what I did. And I can live to tell that's exactly what I did. And I know there's a lot of people who sold as well.
Yeah, I think if I was in it, I would probably be the happiest person ever, because I would start buying and buying and buying, and I'd be like, this is just an amazing opportunity. Like I haven't.
Why haven't you started to scale back into this deal? I mean, 2 months, it happened so radically. Wow, I mean, $25, start like I started.
I did. I put $500 in because I was like, I drained all my stocks. I drained my emergency fund. I have $0 and everything that's going on. I don't know if I should try to build up my emergency fund, then go back into the market. So that's always been kind of, I'm always like in those little situations. I'm like, what do I do first? So I said, I did start building.
You're always trying to think about how to get ahead. And that's okay. My perspective on this whole thing, and I always try to talk to people and let them know, in my opinion, and I could be wrong, in my opinion, I always like to say, keep your investment bucket separate. Don't try to liquidate to sell the truck, right? It goes completely against what I think in the market. And the way you control that is, look, if you want to buy a truck, great, save to cash to buy that truck, or whatever you want to do. Save to cash to make a down payment. Save to cash just to save to cash. I'll go through this downturn having cash on the side. I won't go 100% in this market ever. I don't value that. Now, have I leaned against my cash buffer? Yes, I have. And I've done it willingly. I'm okay. We're 20% off the high. I'm okay leaning back into some starting positions in the stock. Do I have the opportunity to double each and every one of the positions I'm in now? Yes. But I typically try to operate to not mix the different paths of asset buckets. That's just my thought.
No, yeah, that's exactly what I'm planning to do moving forward. Now that I don't have this truck issue of the payments or anything. And I'm not planning to attack my debt for the mortgage because my interest rate is 3.6. So I don't see a point.
Wow.
Yeah,
Okay, that's good.
Yeah, I got a conventional loan too, and it's 3.6, and I only had to do 3% down. So that's why I said, okay, I'm gonna do this. So I got a pretty good deal. Yeah, and trust me, it was hard for me to get the house. I got it. They accepted an offer first, and then it didn't go through, and then I had to beg. I did everything you're not supposed to do. I negotiated the deal, not my agent, and then I used my agent once the seller accepted my offer. So I don't know. But now moving forward, yeah, I'm going to keep everything separate. I'm not going to touch my stocks anymore. I'm still sticking with TD Ameritrade. I love TD Ameritrade. Awesome. And I'm going to I already opened a high yield savings account. Nice. So I can put my my emergency fund there. And then I put it away so I don't look at it. And then I'm going to do
Who are you with for the high yield?
I did a Capital One, a 360 account.
Oh, nice. Okay. Mm-hmm. Right on, man.
I didn't really know who, but I did a little bit of research, and then I think their return right now is 1.5, which is not very good.
Yeah, that's okay.
Yeah, but
when I'm getting in idle cash, I mean, you're killing me on idle cash. It's just I look at it a little different. Like I want to be able to go brokerage to investment like now. I want to, savings to brokerage to investment in a few seconds. So I don't want even to go after that little bit of interest rate. Let's say $100,000 put aside. That's $1,500 to tie it up for 365 days. Yeah. So you make that little bit of interest while it's in there, but that's not my strategic goal for it. My strategic goal is to do what I did through this downturn, and I did okay. It's just me. It's not something I try to be as vocal with on the channel. There's a lot more people that need to hear like fundamental investing 101 type of stuff. So I try not to get too much into that swing trading activity, although I do declare it because I do it, and this is a money game. And I think for certain people out there that hear that, they're like, wow, Ryan's kind of showing that you can have a touch of confidence in your ability to pick up a Carnival at $8 a share and take a little strategic shot. I'm not saying put your whole life savings in it. Take a little shot. It's okay. It's all right. Yeah. Maybe come out of it okay. Accelerate that wealth building, stage in your life. I mean, if you're young, I feel like I'm young too. 42. I'm still in the wealth building stage, trying to get to those financial goals. I'm not retired like Gen X dividend investor. You know what I mean? I haven't pulled up the rocking chair like he has.
One day soon, we'll get there.
Exactly.
Yeah, that's what I do. Like I work super hard, so I try to win. They have like monthly bonuses. So I won the last 2 months. So with that money, I put it in my emergency fund, and then I'm gonna start trying to do that every month. So I feel a little bit less guilty because I'm like, well, I won this bonus. I wasn't expecting this money, so I think I deserve to buy myself some stock. And I always laugh because I'm like, people usually go and buy a purse or something else, and I'm just like, I'm going to use it for stock, and they look at me like, what's wrong with you? But
I mean, you'll be able to buy 10. You'll be able to buy 10 BMWs someday. I mean, what's more? I mean, that's the reality of it. I don't know. Short-term stuff like that really doesn't do it for me. I would rather buy stock. What did you end up picking up? I'm just curious if you were looking at the landscape as beat up as it was. What did you end up buying, for crying out loud?
Yeah. So I usually stick to the same companies. I feel like I'm a boring person, but I got Waste Management at like the low 90s.
90, you bet.
Yeah, in the low 90s. And then I was like, I'm going to have I had like maybe $25, $30 left over. So I'm like, I'm just going to buy some ABR because ABR was it's a REIT, and the REITs have gotten destroyed. And that stock used to be in the 15 range, and it went all the way down to the 4s. So I saw it in the $5 range. So I was like, I'll just put $25 in there, and then if I lose $25, it's fine. And if not, and then it's up like 30%.
Yeah, I was going to say, I thought it doubled. Yeah.
Yeah, exactly. It's up like 30%. My Waste Management, maybe like 6. On my investment, the 500, I'm up 7%. Perfect. So I'm pretty happy. That's only been the first week, and I'm just gonna dollar cost average in every 2 weeks.
That's the value, right? You and I both know 500 in the investing scheme is a starting amount. The amount is irrelevant. It's the plan that you build around it, entering into certain companies as you get the time to do so, and you start to build the portfolio again. People don't understand, man. You don't need to build it overnight. You build it over time. It's all right,
Exactly. Yeah. Like people always ask me, like, what's your strategy, Lydia? Like, why do you do well in the stock market? And I was like, I don't really have like a secret formula. Literally all I do is every 2 weeks when I get paid, I just buy the companies I really love. And if the market's up, great. If the market's down, great. I still buy. So dollar cost averaging for me, it's the least stressful strategy. It's really hard to time the market. I do love when I see it down as much as it's been lately. I see it as a gift from the stock gods, not a curse or anything. But I understand, some people sell their shares. I get it. They get really emotional. I know we can tell them no, but they will learn with time, because I did that in the beginning too. I panicked when I first got into the market and I sold, and I saw that was a huge mistake. And it just took me a little bit of time. And it's just one of those mistakes you have to make, in a sense, I guess. But yeah. So I love the market.
I'm going to tackle this beast of a question. Any thoughts on Bitcoin? I love Bitcoin. I like cryptocurrency. Furthermore, I love the technology behind transaction protection. So the blockchain technology, I'm a big fan of. I think certainly with volatility, the argument ties into just printing money. I don't like the action of the Fed. Everybody is saying, yeah, the Fed's great. They're throwing money at the problem. This is lovely. I think we had a problem before, and I think eventually we will answer to these moves in the long-term range, which is what type of investor I am. So now you're in my wheelhouse. Like now you're looking to prop up the market short-term at the expense of long-term decisions. So I just find it funny how we go back and forth and we can't agree on a budget year in and year out, but we can all of a sudden just make up $8 trillion to throw at a stock market that's come down over a couple months, companies that have failed to prepare properly, things like that. But I think to stay on point with this question, I think cryptocurrency is going to have its place. I think it's lovely. I think it's wonderful. I think there's a lot that I equally don't like about it. I don't like it being a safe haven for dirty money. I don't like that. So what gives? You've got an interested client like myself, let things settle out a bit, because I don't know if Bitcoin from one day is going to be 10,000 to 5,000 to 20,000. So you try to explain to me the value of that if I'm going to actually go out and transact with that. So what is the reality of me going out and buying a new truck with Bitcoin? I think in the future, I think that will be a reality, but I don't think that's a reality in the short term. I may be wrong because I'm not a Bitcoin expert, but I think the question is valid. I think with regard to precious metals, I like having some metals exposure, 5%. It's kind of like a Kevin O'Leary rule. I know Kyle from Passive Income will appreciate that reference, but he always talks about having 5% exposed to metals. And when it goes over 5, he sells back to that core position. I just don't look at metals as an investment. What I mean by that is I don't look at metals as something that I would invest in now to make money in, unless I'm buying like SLV, an ETF, RNG, Randgold, something like that actually holds it and can trade as a stock. Then in that case, yes, but I don't prefer to own metals that way. So the comment about not a fan, as Buffett and Munger see no value creation, but a lot of wealthy investors recommend. I think there's some validation or some validity behind that statement. I typically don't like anybody getting as much love as one individual will get. See, Bill Ackman is mine that I don't like very much at all. I'm vocal about it. I think he's arrogant. I think the comments that were made a few weeks back were really ill-timed and irresponsible, especially for positions that he represented in his firm. I do respect Warren Buffett. I really do. I think it's funny because somebody asked me last week, what are some good investing books? And the documentary on Warren Buffett was one of those. It's not a book, it's a movie. It's an HBO special. And I watched that with a little different lens. I didn't look at it and I'm like, okay, I have to invest like Warren Buffett. I just looked at it like he seemed like a pretty freaking cool guy. You know, he orders McDonald's every morning, and whether or not the pre-market is like up or down will determine whether or not he spends $2.23 on a egg McMuffin or he spends $1.60. Whatever. That to me sticks out. So I think there's some validation. I certainly don't want people tuning into my channel and being like, oh my God, Ryan, you did that. Oh, that's great. I want to invest like you. Nah, I'm just a regular fella who seeks exposure to the market, and I do it in my own unique way, right, wrong, or indifferent. Certainly, there may be pages out of my playbook that you can use, but they don't work unless they work. Okay, I'm a results guy. Like if you take what I say and misconstrue it and go and you fall on your face and you fail, then that's not a successful message. But make sure you're being fair about what really does work and what doesn't work. But I just liked that comment. I thought it was cool. So.
Yeah, I've noticed that happens a lot. Like a lot of my coworkers lately have been asking me, since they know I like the stock market and they saw it falling, and they keep harassing me. What do I invest in, Lydia? Tell me what to put my money into. Can you invest it for me? My boss, actually, it sounds crazy, but he's a multimillionaire. So he's like, Lydia, if I give you $1 million, will you invest it for me? He's asked me that a couple times, and I'm like, no, I will not do that, because I don't want to have that over my shoulders. Like if it's for me, and if I make a mistake, it's my mistake, but I don't like touching other people's money. I think they should make their own choices, and I'll just tell them, just invest in VOO, VTI. I think that's
he can give me $1 million. I'll turn it into 10 million for him. A Gen X dividend investor can turn over his portfolio to me. I'll turn it into 10 million.
Yeah.
What's funny?
Yeah, I believe it. Yeah, I just personally wouldn't do that.
I would question the motive behind a statement like that. Being a multimillionaire, you've got the opportunity to either hire people and pay them a premium to do it for you, or do what we're doing. I still contend. I don't care if you're a multimillionaire or somebody starting out with $25. I still think my way's the best. I really do. If you want to turn it over to a hedge fund that wants to lose 20% of your money so you can go golfing 3 times a year, go ahead. That's your choice. I don't have that kind of money to throw around. I look at every dollar that I make and the importance of preserving those dollars as paramount in my program. I got Matt saying that making up material in the YouTube world this is what I'm not good at. I'm not good at this. 3 years I've been doing this. You've been with me for a while now. I can't do this. I'm not charismatic enough. The only thing I know how to do is be myself. But I think perhaps maybe if I just lost my entire wad, that might just be a lot more attractive to come on and just tell everybody that I sold out of everything. I lost my ass, and people would be like, wow, let's subscribe to this guy. He lost his ass.
No, they'll probably be mean to you. I know anytime I've sold out, some people have gotten really upset with me. Like I've gotten some like, you're a liar. I'm just like, okay.
You're never going to make everybody happy over the social media landscape. Here's the thing though, like if I ever met Matt or you or any of these other fine folks in this community, you'd find that I'm the exact same fella, the exact same. And I hold that pretty true. It kind of comes down to integrity, to be honest with you. When I do portfolio reviews, I show you the account. I do a double take to make sure that the account number isn't there. But that's the actual, it's not Monopoly. Okay. It's not. And it's not an Excel spreadsheet either. Even though I'm in the process of building it, thanks to Gen X helping out with that. But I think that's a smart comment, Matt. I really do. Look, here's the thing. 20 years from now, I foresee this channel being around. Whether or not I'm at 21,000 subscribers or 210,000 or 2.1 million is really irrelevant. It doesn't really drive what I do day to day to build this opportunity. It really doesn't. It doesn't affect my pursuance of this opportunity through YouTube.
Yeah, and I really love you keep your authenticity and you're always truthful to everyone. You don't say things just to make people happy. You say it how it is, and you just try to share what you've learned throughout your experiences, and it helps a lot of people. And I think you have a really strong message, and I think that's why you have, your loyal subscribers. Like I've been loyal to you. Like if I watch any videos on YouTube, if I have any time, it would be yours. I always tune in on your live streams. And there's so many channels out there, but a lot of them, it's just a big show, and they're afraid to actually show their portfolios, and I don't understand why.
Or you have to pay. Like this was before you came along as well, and I started sponsoring your channel when you started, but I really think that I was kind of a pioneer, and a lot of this community won't. If you'd have to go back and you'd have to track. So I'm just asking the community to acknowledge that I really was kind of one of those pioneers to throw the BS flag on a lot of that crap when I started making YouTube content, because I didn't really see the point in paying $30 a month to go look at somebody's portfolio, especially as poor as it was. I just didn't see the logic. And I don't blame the creator. That's the ironic part in my assessment. I don't blame the creator. I blame the patrons that are blindly paying that information for what? You honestly think you're going to do what? Pay that money and it's going to give you some level of strategic edge on the market? It's going to give you some excuse to not learn some of the basic things that you need to know about the stock market? I don't analyze companies like Gen X Dividend Investor, but I'm successful in the stock market. So what gives? What is a really tangible thing that we can gravitate to and teach people on? What is the secret sauce to succeed in the stock market? What is it? Is that the secret sauce, Lydia? Do I need to pay somebody $30 to have exclusive rights to a portfolio? No offense, I wouldn't do it for you, and I wouldn't expect you to do it for me. That's why I give it away for free. And there was a lot of that stuff, man. When I saw that stuff going on, I did. And people were like, what are you doing, man? You're outing me. The one guy that I had to be a little careful was Scribner. And because he's a friend of mine and he was putting out content. And so, but the difference there was that product was quality. And again, back to my point, I don't come down on the creator. I come down on the lemmings that are coming onto YouTube and paying that money when they could just, that might be the only $25 that they have. Where, in my opinion, do you think that money should go? Come on, think for yourself. Yeah. Come on, man.
Instead of looking at a stock portfolio, I'll tell you the secret sauce, Ryan. Dollar cost averaging.
Yeah.
That's the big secret.
Secret sauce, in my opinion, is time.
Yeah, and time.
Yeah. And that's the thing, is if you're channeling dollars, everybody has this problem with inflow, outflow, right? They're looking for that next best thing that they can expend on that's going to help them get to that next level. And they don't realize that they need to put it into that pit stop account. The pit stop account is the investing account. It's the ability to grow that assets bucket up so it can have the ability to pay you or organically pay itself, drip, right? In the meantime, there's very few things in this life that you can establish as an assets bucket that has the ability to grow organically while you're sleeping.
Yeah,
I get it. The DCA with $25, 50, whatever it is. Yeah, you're just infusing that with money. You're showing good stewardship and discipline. But man, isn't it more exciting to be paying to an assets bucket that is working all the time? I can tell you from my perspective, it's exciting. I know Gen X Dividend Investor. It was amazing to kind of pulse in with how he handled this downturn. Yeah, I'm off a few hundred bits, but I'm staying true on my positions and, looking to pick my opportunities where I can. I'd really like to know what moves he made through the market, because I would be extremely surprised at the level of discipline if he didn't buy anything. I've been trying to buy everything under the sun, and I'm making a small fortune doing so. I'm opportunistic that way.
Yeah.
And I know he's the same. He didn't get to his position by not picking shots in the market and, picking opportunity and paying attention. And, Realty gumps down into the low 40s. I mean, that's like screaming at you, hey, buy me.
Yeah. Or Starbucks, like you mentioned earlier, when it was in the 50s, I haven't seen that since they announced one day that they were closing 100 stores and everyone panicked and it went down to like the 40s. I was like, oh man, but that's the importance of, having some cash on the side, because then you have the opportunity to pick up those shares. If you don't have that, then it's you just watch it and looks and you're just sad that you couldn't take advantage of the opportunity.
Well,
So
I had an out, but my Roth IRAs, right? I had my max funding complete in January, right? So that was 12 grand, 6 grand per account. Boom, it's there, it's in there. And then boom, February rolls around and I had about 20%, 20 grand in each account, just because I got a touch lucky with that 20% that was on the side. But when it went down, I was buying at 27, 26, 25, 24. Who thought that it would have went all the way to 18.5 on the entry? So by the time it got to 18.5, I was done buying. But my out was to go ahead and bolster that taxable account like I did, because I had that $100,000 bill sitting on the side, and that's what I did. And so, always leave yourself an out. I'm so glad that I did. That's been a little bit easier for me to cushion, knowing that I could take a little bit advantage of this. And I know that's the only thing that you need to do in a market like this, is make sure that you pick your spots, pick quality. That way, if it does go down another 20% on this next leg, who knows? I don't think that's going to happen. I've said this from the bottom. And people can acknowledge, look, I said, I thought that perhaps maybe that was it. I thought the bottom was in. That was when nobody was saying that. Nobody. It's like, no way we're going to have a V-shaped recovery. That's just not what happens in bear markets. Okay. Why
it's
is
also
this?
the news, we don't know how it's going to affect the economy either. We'll see like how much it affects earnings. I don't know if it's going to affect it too much, because they were only really affected in that third month, because their earnings close on end of March, right? And all of this started happening March, April. So we'll see how much it affected. It's how it's going to affect it maybe in the next quarter of earnings. I think that's when we're going to start seeing other numbers, but I honestly don't know what's going to happen, but I'm just going to try and save up some money so I can buy some stock.
Compliment. That's your fellow Californian. That's your fellow Californian. Yeah, I know Ben really well. He's awesome. Good people.
Thank you so much.
Yeah, I got the West Coast connection here. Hit me up. I'm alone on the East Coast here. No, it's really cool. I didn't mean to interrupt you, Lydia.
It's okay.
Throw that in there. It says Joe Trick just says smash the like button. He just hit 1,000 subscribers, man. Congratulations, Mr. Joe. Rock on.
Congrats.
That's the hardest one to get to. I don't know. Yeah. I've been in no man's land for a while, but my channel's started to kind of kick up a little bit. I don't know. I'm almost to 20 grand. I'm cool.
Yeah, you're doing great. I kind of neglected my channel a little bit.
I've done that too.
I'm trying to get a little better with being more consistent. But and my channel is just for fun. I just do it for fun. Like when I feel like making a video, I'll make a video, and then I just try to share like what I'm doing. And yeah, I just show like it is. I call it my investment journey. It doesn't. So I did it when I paid off my truck. I bought my house, and now I'm gonna go back and now I'm gonna build my taxable account. So, and I have to do my emergency fund first, though. I feel like, but I'm gonna do.
What are you so ripping about the taxable account for? What's your thought there?
I know I should do my Roth because of the tax benefits.
No, I'm just your colleague through YouTube and friend through YouTube. That's it's a question that I don't mean to be piercing, but it's an honest question, certainly.
Yeah. I'm trying to do both. I feel like I just need more money to do everything, and it's so hard. So right now I'm just doing my it's a lot more fun than M1. I think that's why I did that. But maybe I should. I don't know. I don't have a real answer for you. It
was rhetorical. I think you kind of know the answer to it, because here's the thing. I'm 42, right? I just recently found out some information. Another shout out to Gen X for helping me understand my potential in my taxable account. But I really think you need to be at the impasse that I was at, being able to really maximize your Roth and get that money put away, tax protected someday. I guess I don't understand the philosophy unless it helps you on the income, right? Reduce some tax liability. That may help you doing like a traditional Roth, right? Or a traditional individual.
Instead of an IRA.
You could do something like that, but taxable accounts, I think they're overrated. At least by the 10 million people that hold Robinhood, they're overrated. I'm a big advocate of getting that money tax protected. It is a retirement. It's it's built for the future, not really built to touch in the short term. And that's why I think if you did $20, then that's good enough, not to stress yourself out. Because I'd rather see you go to the high yield savings account in the short term. Doesn't mean that you can't start the taxable.
I think I need to do a Roth or like one of them, because my income is increasing, and I don't think I'm ever going to hit like the cap that I can't ever invest in that, but you never know. So I think I need to take advantage of that. In my mind, I feel like my Roth is going to be boring. I'm going to probably, it's going to be my Roth. I'm probably just going to invest in VOO and VTI. And I think I do need to, since I just got that mortgage, I'm trying to figure out my priorities and what I'm going to be doing with my money. But
would you consider, not to interrupt you, but would you consider doing one or the other, VOO or VTI, not both? I get this question all the time on the channel, and they're like, which one? And I'm just like, yeah, they're both really good. I just think VOO, you could probably have some supplementary holdings to the S&P 500, like a small cap, because you're not getting exposure, right? The S&P 500 is 81% of the U.S. domestic market, right? Large cap holdings. You could supplement that with some small caps, whereas VTI is kind of everything rolled into one. And then the further discussion is, well, do you want to add some bond exposure? Do you want to add some international exposure? I know for as young as you are, you don't need it, right? But I'm just throwing that out. Diversified doesn't necessarily mean domestic US. Diversified may mean having a little Europe, having little emerging markets, et cetera, that type of thing. And you can still do that through ETFs, but I always kind of shy against owning both of those at the same time. As a matter of fact, I would say don't do it. Own one or the other as your base, and then look to diversify. Even if you just did single stock on top of that, you could do something like that. But
I think that's a good idea. I don't know if I really have a preference. Maybe if I do that, I might do VOO.
I would.
VTI is like the total stock market. I don't know why. Me mentally, it just sounds a little less appealing to me. I don't know why, but the S&P 500, I always think that's a really good to find an ETF that does that, because there's 500 companies. If one of them doesn't work out, you still have 499 more. So, and then maybe I'll do like, so I can, because I like individual stocks a lot. So the ETFs, to me personally, they're more boring, but they are important. So I think that's why I end up going to a taxable account, because I know if I do the taxable, I'm gonna pick individual stocks, and I know if I do like a Roth, it's like a mental thing. I think I'm gonna pick VOO VOO.
Yeah, I got you. Yeah,
individual ones.
Yeah, so I think with my understanding before I spoke to Gen X and he put out that video and kind of straightened out my thinking on that, I think you'd be okay doing that. As long as you're investing in those good quality dividend payers, JNJ in the taxable, to set it up for dividend income down the line, set them up for a drip, and then boom, you can turn it off someday and start to render those dividends off of them. But those need to be like multiple year positions. You want to do me a favor? Take a read off of this comment and see if you can. I think this is a younger individual who came onto the channel earlier. I invited him into the live stream, and I'll hear your perspective on it as a fellow investor, and then I'll take a shot.
Okay. Question. 18 years old with 15K in my Roth IRA, with most of that sitting in the brokerage. I missed the bottom, and I am wondering if I should just start cost averaging in or wait a bit. So from what I've learned in my period of investing, it is really hard to time the market, and you're going to drive yourself nuts when you say, I'll just wait and I'll buy later. And then you see the market up again the next day. And what ends up happening is your money's just going to keep sitting there. So it's probably, if I were in your situation, I would get some of that money and put it in. Don't put all of it in one day, and then just dollar cost average in. And at least you get, the hardest part, I believe, is actually buying into the market. Once you start buying into the market, that's a huge step. And if later on it goes red, you're going to be extremely happy because you can buy when it's at a lower price. When it's green, you're going to be happy as well because your money's going up. So if I was in your situation, I would start buying and then dollar cost averaging.
Yeah, I think that's perfect. I think you hit it on the head. That's all really sound. I think at 18 years old, I would be patient. I certainly don't like to hear somebody that's 18 say, I should wait. Because here's the thing, I believe so much in my message that for whatever reason, you have found your way into a Friday live stream on a fairly small YouTube channel and a much smaller community. Some of our portfolios here are representative. There's many people in here that have $500,000 portfolios and 7-figure portfolios. So first and foremost, what I will say is congratulations, because at 18 years old, I would have killed for this information. Okay, Let me rephrase. You're lucky. Really, this information in the hands of our youth is empowering. And I'm telling you what, if it's urban or rural, cities, country, money, come from money, don't come from money, my strategies work for everybody because it has a lot to do with more of a mental understanding of what you're going to get involved with, right? So Lydia said it perfect. When you get involved with the market, your money is going to fluctuate. Don't have expectations that you're going to get invested in the stock market only to not be able to or not need to work for the rest of your life. Okay. You still want to pursue your dreams. But for those 18, 19, 20, 21-year-olds who can hear my message, internalize, validate, and deploy for themselves, you are going to be the ones that are going to blow through the 7-figure mark someday. The question is going to be how big, and potentially, do you have the chance to make it to the 8-figure mark? Yes, I'll say it again. Do you have the potential to make it to the 8-figure mark? I provide tools to provide you that mathematical validation. You don't need me to come on here and blow smoke at you and motivate you and tell you things that are mathematically true. What I mean by that is you don't need to listen to me and say, wow, I met this guy on YouTube that was incredibly excited about investing. Yes. What does that mean for you? Nothing. Nothing. All it is an opportunity that we're opening the door for you that you're going to need to explore on your own. But you've taken a big step finding your way into a community like this that talks about the importance of some of the individual things that I like to talk about with regard to putting a lot of value in invested dollars, should remain invested dollars for your entire life. Don't get mad at me, Lydia, right? I know you've said, for those people, I always say it's the hardest, easiest thing that a new investor can do. Pick a nice index fund, invest in it, and forget it for 40, 50 years. How many people actually do that? Nobody. Nobody. Everybody wants to tinker. Everybody wants to talk themselves into at least an annual review. Why? If you're not going to touch it, you don't need an annual review. Throw it out the window. Just get invested in a tax-protected account like a nice Roth IRA. Do what you can when you can, build upon it over the course of your life, and you will look back at this and be like, I didn't have any mistakes. I found my way into this independent investor channel, and they were talking about things like wealth building and not putting so much emphasis on finding the next biopharma stock that is going to make you a millionaire overnight, because that's not reality. The reality is, if you can get involved with what is it that I say all the time? Jam as much quality into your retirement account with as little a downside risk as you can possibly put in there. Learn to do those two things, and you will be that empowered investor that I talk about all the time. And I will continue to do this message because I feel like you're not the only 18-year-old out there with these types of questions. Okay. So I just answered that question more on the philosophical side. Lydia answered the question more on the, hey, scale into the market, take it in chunks, have realistic expectations of the market. Okay. We're not going to sit here on a YouTube channel and say, do $3,000 here and $5,000 here. No, I don't think that way. I don't. What I'm going to do is I'm going to foot stomp the importance of having a cash buffer. So then the question becomes on your behalf, well, how much am I comfortable with, right? The market's pretty volatile right now. We do have some earnings coming up that could be shaky. So maybe I do just want to put a $5,000 bill away. Maybe I do just want to put a starting amount in the S&P 500, which VOO run you $2,500. It's a nice round number. Boom, there's $2,500. Congratulations, you're an investor. Set it up on a dollar cost average, set yourself up on a dividend reinvestment program, and live to fight another day. But the last thing I want to see somebody do is make decisions because they're excited about a Friday live stream, only to sell out of the market 2 days into the market next Wednesday, because it's either up 10% or down 10%. Right. And so preparing somebody to make sure that they're entering the market with the correct mental tolerance to the market is key. And there's not a lot of 18-year-olds. There's a few 20-year-olds in this group. You're one of them as well, that have that investment savvy, which is really, really rare. It's really rare. And that's why I identified the niche on YouTube, honestly. And that was part of my fighting the system, because I felt like for every voice like mine that was trying to say, no, that shouldn't be the focus. It shouldn't be the focus at all. Instead, there were tens of thousands of people being misguided on their investing track. And sooner or later, they'll find out that they're down a road a really, really long way. And they're going to have to backtrack on that road only to get on the correct path. We can't save everybody, but I really think it's important to understand before you put that foot in front of yourself, understand why you're taking that first step. Because I do agree with the fact that once you're invested, you're invested. Okay. There doesn't need to be any doubt in your mind as to why you're doing what you're doing, what your long-term goals are, what your investing time horizon is, why you're investing in the account you're investing in, and why you're holding the assets within that account that you're opting for. If you can answer those and you can repeat it back to me with some level of confidence, then I give you the ominous dominus to be an investor. But until then, I will just say congrats, man, that you found your way to this group. Pay attention, be a sponge, absorb.
Yeah, I'm a little jealous because my sister's 18 and I'm trying to make her invest and she won't do it.
Well, that's the thing. That's the thing. You know, what good is going to come out of that? You know, you really want to meet them 50-50 on the deal, but you can talk until you're blue in the face. It's the same thing. I have one brother that invests and I have the other one that does just a 401k, and he's blind to any of the other options. And he's got me as a brother, you know?
Yeah. Yeah.
What gives? Am I doing a disservice by not pushing? Am I doing a disservice by not encouraging him in the right way to do something that he hasn't taken the initial steps to find out on his own? Like, I just look at it from the different perspective. If the shoe were on the other foot and I had me as my brother, right? I'd be like, what do you do? What do you know? How to help me? Freaking, I can't sleep. Help me. Can we talk? Can we Skype? Can we Zoom? I want a meeting. Come on, tell me what you know. How is it that you do what you do? There's people who watch me and they're like, how in the hell do you do what it is you do? And I can't put my finger on it. There shouldn't be any explanation. I gave you a small insight to the real estate piece tonight. But the fact of the matter is, I am just a disciplined investor, and that you can teach. And that, furthermore, when you go beyond my success in the market, is scalable and teachable, and anybody can enjoy it. They really can. But you have to be willing to accept it. Otherwise, you're not going to understand why you're doing it. You're going to get involved, and you're probably going to trip and fall on your face, and you're going to get out. And then you're going to have hard feelings with your family. They're going to be like, you're going to be the first one that gets blamed.
Oh yeah.
Why did you do this to me? This is terrible. I don't know how this makes any sense at all. I got invested in this, and then this pandemic hit the world, and now my portfolio is down 30, 40%. I've lost half of my money. I could have went out to eat every single night for the next month, and I've just given all that money to the stock market gods. What gives?
Yeah. Well, I always say you never lose unless you sell.
This is true, but this is coming from a perspective of a seasoned investor. That's different. You have to make sure that be careful with how you talk to people, right?
Yeah.
Because you know what you know like the back of your hand. It's easy. It comes naturally, right? It's natural. This stuff doesn't come natural to a lot of people. It blows me away day to day how many people I talk to who just don't get it. Like, hey, what do you think of the stock market today, Ryan? We're really losing a lot of money. I don't know. I bought this morning. I don't know what you're talking about. I've completely flipped my perspective. And that is what you have to do. It's very cliche for me to come on here and say, buy low, sell high.
Mm-hmm.
But that is the root of stock market investing. Those are the people who can deploy that and not just say it. Because it's fun to say, and it makes all the sense in the world. You can look at a chart and say, yep, I can see if I bought here and sold here, I could have made a lot of money. But until you put that into real dollars and realize that it's not monopoly, it's your money, your hard-earned dollars, in that well-established account that you're putting to risk, that's when it hits home for people. A lot of people have a hard time connecting those dots, man.
I think they also get like discouraged or scared or overwhelmed because they think they need to know all the information and all the details in order to invest. And they just get overwhelmed and turned off. And they're just like, this is too much. I don't want to invest anymore. Like I actually got my real estate agent into investing because I try to explain things to them as simple as possible. But yesterday, I had to call her the day before yesterday because she started investing all her money in one day. And I said, you need to calm down. And she was investing it in random things. And I'm like, she's like, I'm up already 10, 15%, Lydia. It's fine. It's fine. I'm like, I got so scared for her. I had to call her on my break and I'm like, you need to calm down. You can't do that. You can't just invest it wherever, she's doing like penny stocks, random stocks. And I'm just, so it was scary. Then next thing you know, maybe there's some bad earnings and then her portfolio tanks 50% and then she's going to get mad at me or something. I don't know. So they get they get too happy and start doing all kinds of crazy stuff. But I mean, I guess that's how you learn. I don't know. I don't know.
Guess, gosh, I'm very open. I've been there, done that. And I hope for that 18-year-old that came on and said, hey, help me do this. Sounded like a really good question. So I hope some of that stuff is put aside, but I can't overemphasize enough. Even the best quality stocks sometimes take a hiccup. Yeah. Investing in single stock is a risky proposition. There would be very little, if any, professional money managers out there that wouldn't say that you need some level of mix of equities and fixed income. Okay. Now, currently I have none in my portfolio. I might have a touch in my 401k, but other than that, I'm pretty much an equities investor right now. But that you have to understand that takes a higher risk tolerance, man. Yeah. And so if you want to come to me and say, I've got a basket of some penny stock stuff, and I've got, a few other things that they've got some drugs in level 2 or phase 2 approval process. And I think they're going to work out really, really well. There's not even a metrics at all to put that person on a risk tolerance scale at all. It's not even a 10. You're not even a risky investor.
Gambling.
It is. It really is. And you'll lose. I mean, you'll lose. And I always say the worst thing that can happen to somebody who's engaging in that activity is that you make a little bit, because then for some reason you think that that's super easy. And it's not easy, and it's impossible to win over the long term. Whereas the opposite can be made when you look at charts of Johnson and Johnson, I know that's a bad example for you. I know you don't invest in the company, but you know how big I know
you love it.
Yeah, Microsoft. I think JNJ is the number one company in the world. I really do. I think you're right about your assessment, and that's why I'm sensitive to that for sure.
Okay.
You're right. You're right, and it can affect that. We had Kyle on earlier talking about the smoke stocks. And I feel just about those the way you feel about J&J, and I think that's awesome. I think that's great. But when you look at those good companies, Microsoft, for example, it's like they have done nothing but make shareholders wealthy over time.
Yeah.
So is it really that difficult? Is it that boring of a proposition to invest in a company like Microsoft and live to fight another day? Or is it the allure of something else to rationalize investing in another manner? I'm not really sure. I do my very best. I really try to put myself back into that mindset because I was there once as well.
Yeah.
And man, have I matured. Holy moly. One is insane. And then investing is really one of the only sane things in this life, to be honest with you.
Maybe people think those companies are boring. I don't know what it is because I don't really do anything crazy. I love Visa. I love waste management. I love Microsoft, Ross stores. It's not like I'm investing in the next big thing. Sometimes I put some money in speculative positions like Roku. I was known as the Roku girl. But I don't put the majority of my money in there. But I do put maybe some, but the majority of my money would go in those companies and that I know have a lot of potential. Like Visa, there's still a lot of countries that use cash, so it has more potential to expand. And I mean, regardless of how the world's doing, you're still going to need to buy groceries. And
whenever you're on the channel, we're going to talk Visa. Visa is mine and your stock.
Yeah,
that company is freaking on fire, man. I have made a small freaking fortune with Visa.
It's amazing, and it hasn't even been in the stock market that long. I think it's maybe since 2008. I don't know the exact year.
I think you're right. I was surprised at that when I saw that. I've looked at MasterCard and I've looked at American Express as well, and they just don't stack up. I've never owned those two companies. I own a little touch of PayPal in my other account. I'm not really that stoked about it, to be honest with you. And I know a lot of people are into Square, but I don't know. Yeah, Visa's a beast. I love it.
It's one of my favorites. And even people get discouraged because their dividend yield isn't so huge, but the payout is very low and it grows its dividend payout every year a lot. So it is a dividend grower, but it's just that the price goes up so high that dividend yield percentage is so low because of that, I think.
That is correct. Yeah. If you get I've made more with capital appreciation. I don't invest in Visa for the dividends other than for you are right. Its dividend growth is off the charts. So you could justify, investing in the company for that. But man, it's a cornerstone. Yeah, exactly. And it's a cornerstone in my portfolio. And Visa's a Dow component, correct?
Is a what?
It's a Dow component.
Dow, honestly, I'm not sure if it's part of the Dow.
I believe it is. That's why a lot of these folks who are looking in the landscape right now, looking to get invested, man, I don't know. Looking over the Dow Industrial, looking at the top holdings in the S&P ETF index, if that's your thing, there's a lot of good companies out there, and I just would rather people look at those primary holdings as opposed to opting for more of the speculative. If you want to speculate, do it after you've got some stuff put away. Because as a disciplined investor, right, I've got the money to speculate on a Carnival, Delta, things like that. But I've got enough discipline to say, you know what, I'm good. I traded in and out of it twice, made my trading profit. I'm good. I move on, and I dump that money into quality.
Yeah.
I dumped the profit into free 100 shares of AT&T. They were free. House money. That's a beautiful thing, playing with house money. Oh, it's a good feeling. It's a good feeling. It's a game with me. I love investing so much that, and I immerse myself into the gig. That's how I always said it with a straight face. I could take Gen X's portfolio and turn it into 10 million. He's laughing right now. I guarantee it. He's probably not laughing. He's probably like, what the freak? Jesus, man. I'm the first one in his live stream every single Friday. And listen to this, man. He's bastardizing my portfolio. No, but I
Oh,
could
man.
actually.
Yeah,
You know
that's
what I
why I
mean?
like the stock market so much. Like, there's always new things. You can always keep learning. Like, it's never boring, you know, at least not for me. Like, I remember when I first started investing on the weekends, I would spend hours on my computers just trying to figure what's a PE ratio, what's
Yeah.
everything. And then, but I mean, it's good information to know. So
You don't have to say it, but see, Matt's one of those investors that actually disclose a big portfolio, right? He's
oh,
working with a good big portfolio, right?
mhm.
Seasoned investor, phenomenal risk tolerance, you know? And this is what I talk about when I came onto the YouTube landscape. It was a lot different. I had a lot different crowd that I was engaging with, kind of like this, but not even close to the amount of community that we've got going on here. I think this is a great core nucleus moving forward. This is where I put value on the channel. I mentioned the 20,000 on the channel. I'm very proud of that. That's great. But
Yeah.
I'm way more proud of the core group, way more proud, because that is what's going to stand the test of time going forward as we start to build wealth for each other, through each other, but for each of us as individuals. Does that make sense? So 10 years from now, as a group, we should be that much more powerful than we are now. And 20 years from now, there's some prospects there. That's exciting. That really is exciting. But I won't say names, Matt. Sorry. I've said it a few times on the channel if you pay attention close enough. But I just look, that type of activity is garbage. I just don't like it. I don't, I know you disclose, you're very transparent on your channel. And that's what I will say is thank you. And you know how transparent I am as well with my holdings. So, but you know who I'm talking about, Lydia. You've been
I
around
do.
for a while. I know you do. All right, let's move on. I tried the Motley Fool once, Duck's Head, nice. To investment people.
Yeah, but I'm excited, Ryan, for you to see my portfolio in 10 years. I have no excuses anymore to cash it out for any reason. So I'm excited to see it.
Like I said, I mean,
No,
when you're
I'm mad at myself. Every time I do that, I get like, what? Because it takes so long to build it.
I would go through this exact same deliberation. I'd be like, why, man? You set up those rules and you broke them. If you can't keep rules with yourself, who are you going to keep rules with? Now, I bend rules. Don't get me wrong. I really do. I bend rules. I take calculated chances. There's been some times throughout this downturn when I'm just been like, oh, God, what am I doing? And I've deployed discipline where I should have deployed offense, and vice versa. I've deployed offense and I should have been patient. But you got to have a short memory. You do, and you got to learn and evolve.
Yeah.
And I just think the way to combat that is to not think that you need to do one or the other exclusively. I would look at it like, look, I really do see the benefit in doing both.
Mhm.
So to do both, but just control it with the scale piece.
Yeah, that's what I want to do, because I would feel really sad if I was just building an emergency fund. I don't know. So I want to buy stock. So I think I'm just going to do half and half. And then I get the best of both worlds. And I will not touch my portfolio anymore, ever.
Well, I mean, once you start checking off the boxes and say, I want to be a 50-50 investor. It took me a while to get to that. And that's exactly where I am. I'm a 50-50 investor, and I could talk for days on each of the halves. Why I invest passively in the ETFs, why I do that, and why I pursue dividend growth. Those two pieces right there are two pieces that have benefits and downfalls each that are equally weighted in my mind. And so I can't put a 75-25 mix or a 25-75 mix in my portfolio and make it make sense for me. I want to do both. So I'm 50-50. I will always aim to have 50% of my wealth in a bucket within my bucket that's passive, always working for me. Because here's the thing, you own a portfolio of 30 stocks. there's going to be stocks that you've hardly ever heard of in the S&P 500 that outperform. I want access to that appreciation, right? Now, the counter argument to that is, well, Ryan, what if you own a bunch of crap in the S&P 500? Yeah, no, I get it. That's not why you invest in the S&P 500. That's not why you do that. You do that to gain or match that 8 to 10 rate of return per year. That's it. Yeah. You want your money to work at that clip. Add to it when you can, right? Take advantage of the 2% dividend, reinvest it. You're investing in the market. It's a sleepy way of investing, but it's a powerful way of investing. There's nothing boring about an 8 to 10% rate of return. If you think it's boring, go back to the compounding calculator and figure in the expense, what I teach upon, right? Because a lot of people invest in a way that it's the analogy that I use, man. Investing with a financial planner is like investing. It's like owning a house that's full of termites. Okay. The termites are slowly eating away at your house, and you have no idea that they're eating away at your house. And someday down the line, you're still going to have a house, but it's going to be partially eaten by the termites. Okay. As a self-directed investor, that piece of it is completely put aside. You're termite free. There's no termites in your program. Your program allows you to direct connect to the stock market. So that 8 to 10% is fully protected. You don't have a money manager that is siphoning off fees every single year off of that account, right? So a 50% pillar in my account makes sense on that side of the house. And then the dividend growth investing, I mean, I really got to give it to Joe Carlson and Gen X Dividend Investor for really solidifying what it is I knew about dividend growth investing. But those folks really put it to the forefront for me. And I'll be forever grateful for those two creators because they're on a different level. They really are. And good on me, man. I wish we had more complimentary lingo. You guys, you know that I can be pretty scathing as well, and rightfully so. I dole out criticism where it deserves to be criticized, but I'm quick to give compliment where it's deserved. And I think, you know, those two creators, I definitely give my kudos and shout outs to everybody, yourself included, to everybody in the group. But just like what you said about me, which I'm touched that you feel that way, that's pretty awesome. That gives me motivation to do this gig. And I think others feel the same way because that genuine piece that I provide is real. It's very real. But I feel the same way about those two creators. And yeah, the 20,000 is nice. But again, coming back to the real value, I just feel thankful that I'm, you know, get to associate with those folks. I wish Joe would come around more. I really do. He doesn't seem to be as omnipresent as Gen X Dividend Investor because I think there's about 10 of them. He might be a bot. I don't know. He might be a bot. I don't know.
I feel like he used to come around before when he first started a lot more to the stream.
Joe, yeah, he did. And hey, I tell you what, I hold no you know, ill will. There were a couple times he came by the live stream. I think that was really cool because somebody recommended him to me when he had like a couple hundred. I said 600, and Joe came back to me and said, "No, Ryan, it was like 300." When I watched his first video, and I was like, "Legit,
yeah,
legit. That's how you do it. That's legit. Credit where credit is due, baby. Dude's solid as a rock." And so people who watch that, they're like, okay, what is this? And it's amazing to me now that he's got a bigger channel, how much guff he takes, you know? And the funniest freaking video I watched this week was the one where he was arguing with one of his a few subscribers. He puts the questions on the board there. And no, you're good.
My famous cat.
Absolutely. Oh yeah. Yep. YouTube famous. Yep.
Oh, there he goes.
But
so
yeah.
Okay, give me. Okay, I'm put him over there.
I was just laughing. So I told him, I was like, I can't remember watching a financial YouTube channel where I laughed so hard because he has that sarcastic commentary back to people who like, they're just like, you know, this is crazy. You're crazy. You think this way and this way. And he just dissects the question up. And I'm just laughing. I'm like, why do you even try? This guy is obviously brilliant.
Yeah.
Like, he obviously deliberately thinks through. He's not arrogant. He could be. Good grief. He's freaking sharp. Leave him alone. He's good. Let him teach, for crying out loud. Get the hell out of your own way. Maybe you'll learn a little bit. Listen, clear out your ears a little bit. Maybe you'll learn something. But nope. It's the YouTube community, man.
Yeah, people get jealous, like, why does he,
maybe that's it.
Why is he doing so well? And why can I do? Like, I don't know. It's just, people are just like that. They just try to make him feel bad.
Yeah, maybe you're right. Maybe you're right. I just give credit where credit is due, man. Dude's solid as a rock. He's done a few videos. The one where he talked about, there was a video that came out that was really going against dividend growth investing. That's my favorite Joe Carlson video, is where he went through and he gave probably a half a dozen reasons for each point that this YouTuber made. Just shredded. I'm talking shredded in a calm way. Yep, this and that. Yep, here's lesson one. Here's an article from the Wall Street Journal. Yeah, here's an article from the board of directors at Berkshire Hathaway. Here's a letter from, and he's pulling out all this evidence and he's putting it on the YouTube screen, and it's just like, oh my God. I will, Joe, I get it. I'm a believer. I hate dividend growth investing works, but it's just pretty
great in the legal world. He should come work with me.
Oh my God, right? I know. No, he's probably getting paid. I think he's got a really good job too, which I hope people are seeing through that too a little bit, in that his program works really well for him. He has the ability to invest fairly conservative. So if I was going to be a little constructively critical of Joe's program, I've always said I thought he was a little too conservative.
Yeah.
And I'm entitled to my opinion because he respects me and I respect him. But I think some people look at that and they're like, wow, look at that pretty little chart in M1 Finance. It does nothing but go up. He must be the greatest investor in the world. Well, hold on a second. If you can fund your account aggressively, right, and invest in the manner, you have to listen to why he invests the way he does, as opposed to just try to copy what he does.
Yeah.
And that's where I think some of the message is missed sometimes. And, you got to look below the surface a little bit, take it with a grain of salt. There's a lot to be taken from that channel, but you just got to be kind of careful anyway. But anyway, hey, we've been going about 2 hours.
Oh, wow.
Lydia. So I'm going to try to close it down. I do that in respect to the people. I think a lot of people put this in as a podcast after like Saturday morning and they wake up and they watch it. But thank you so much, man. I've had some killer guests the last couple of weeks. It's been so much fun. I sure look forward to this. I always turn on this live stream and I never know who's going to pop on. Thank you so much. You guys are great picking your opportunities and spreading it out. But say goodbye to the group and good luck next week. And we'll see you next week. So
bye, everyone. Thank you for having me. I appreciate it. Okay, bye. Have a good night.
You too. Thanks, Lydia. Thanks for coming on. All right. Very cool, guys. I'll try to browse down through the rest of these comments, and I want to thank the 2 channel creators who came on this evening. Want to thank some of the younger folks. I personally invited those folks into the crowd. I really hope you heard my message. It's super, super important that we continue to drill down on those folks and make sure that you understand you don't need to rush into the market. At the top of the stream, I reported to everybody that the stock market was still around, and I do believe that the stock market will be here tomorrow, 6 months from now, a year, 2, 5, 10, and 25 down the line. So let's adjust our thinking accordingly, all right, and get our investing mindset correct. That way it'll set us up for the best level of success in the stock market. But really want to thank the robust community that made their way in here as well. I did most of the shout outs this week that I could, but thanks for Matt. I threw your comments up there. JMac Investing as well for making their way in. Let's keep it a secret from Jamie, what I did for him today. If you don't know, you can check out my latest upload in there. It's kind of disguised within the video, and that's fine. I'm a funny, fickle guy like that. I like to do things like that just because it's the right thing to do. But I hope the intent there is well received, and I hope the results kind of pan out. I haven't checked the results, but I was satisfied with the results before I kicked on. It's starting to make a difference. And on behalf of the channel and myself, I don't do that very often, but I did it today, and I thank you. I don't do that very often, and I won't make a habit of that, but it was necessary. And hopefully that helps the individual out. Again, it was the right thing to do. I think some of these other channel creators are going to try to think of something strategically to do to maybe help out a little bit. It doesn't take any effort on my part to do something like that. Let's be real. Come on. The impact that's felt is well worth the strategic ask for a couple minutes to lean against my subscriber base for a little bit, to do me on behalf of the channel for somebody else a small favor. So great, robust discussion tonight, guys. I will sign off. It's a little over 2 hours. We'll get this thing up and live. Thank you so much for all your support. We'll continue to roll out this product every Friday at 9 o'clock. It's an honor for me to do this. I'm privileged to do it. Thanks again to the guests who have made their way on. If you're ever interested in becoming a guest, don't hesitate. Okay. As we start to build this product up, I do foresee more people making their way in here, and time is going to be a little bit limited. But the way that it is right now with this tight-knit community, we have the ability to roll on this live stream and really give people the opportunity to come on and really talk. And that's what it's about, is drawing attention to everything that needs to be focused on at this point in the market for your guys' benefit. So I'm glad to do it. With that, I will sign off. Take it easy, guys. Good Friday to you, and have a happy Easter as well. Be safe to everybody, and we'll check you next Friday. Thanks a ton, guys. Really appreciate it.